I'm Nisha Poddar, and on Too Sharp with ET, today we break down how Donald Trump's new tariffs are hitting the Indian exports, markets, and your wallet. Let's get straight to that. On 1st of August, US President Donald Trump imposed a 25% tariff on most Indian exports to the US. And that's not all. The tariff also comes with a penalty on sectors tied to India's oil purchases from Russia and Iran. So why now? Well, Trump accused India of having high tariffs, non-monetary trade barriers, and close ties with Russia. So India refused to cave in to US pressure on opening up the dairy as well as the agriculture markets, leading to a breakdown in the trade talks just before the 31st July deadline. So who's most at risk here? Let's take a look at that. So India exported $87.4 billion worth of goods to the US in the year 2024 and ran a trade surplus of $46 billion. Trump's new tariff strike hits India's biggest export engines. In sectoral breakdown, gems and jewellery is hit the hardest, over $12 billion. Pharma is also now under tighter US lens. Apparels as well as textiles, even electronics including iPhones, are at risk here. Others include auto parts with potential risk of $3 billion, and seafood like shrimp exports are especially vulnerable. Fallout: Apple's expansion of iPhone production in India may be delayed or even downsized. In overall economic fallout, well, GDP, jobs and MSMEs are adversely impacted. According to Barclays, the tariffs could really shape 30 basis points of India's GDP in FY26. Exporters have already started slashing the forecasts. The gems and jewellery sector alone supports 5 million livelihoods. Pharma and textiles together add millions more. A slowdown means layoffs, wage stagnation, and also less rural consumption. It's not just the tariffs. India is now feeling the full heat of Western pressure on energy and strategic trade as well. Oil marketing companies face higher crude bills, so the domestic fuel inflation is likely. 6 Indian firms are sanctioned over Iran oil trade. And now there's a 50% tariff on copper as well. India says the direct impact is small, but don't underestimate the knock-on effect on the downstream industries as well. So how does this global policy fight really land in your life? Well, electronics could get expensive if production shifts. Jewelry sector to see job losses, which really hurt incomes in tier 2 and 3 towns, remember. Medicine prices are on watch as pharma margins are squeezed, and your fuel as well as cooking gas, that also will see a monthly budget rise. And unemployment is export linked. On the markets, the reaction panned from panic to pullback. Well, the Indian equities stumbled early but clawed back losses by the close of the session as the traders really treated the tariff move as a negotiation tactic rather than a full-blown escalation, at least as of now. That's the understanding. Sensex lost around 300 points, Nifty less than 100 points, and after, remember, almost a % drop intraday. So the markets logged their third straight monthly decline, falling around 3% in the month of July. Mid and small cap indices each dropped about 1%, and in stock impacts, well, textile exporters like Welspun, KPR, Vardhman were down 3 to 5%. Adani Enterprises lost 4% on Q1 performance. FMCG star HUL rose on strong rural demand. Geojit said investors rotated to defensive FMCG plays insulated from global trade risks. Meanwhile, the oil and gas stocks, they underperformed today, tracking the global crude concerns. Remember, Brent crude has dipped and rupee ends down 2% this month, worst seen since September 2022. So lots to see on how Trump's tariffs bombshell really reshapes our trade, investment and the market mood, and we'll keep you up to speed going forward as well. Keep it with Too Sharp with ET. Thanks.